What's up, guys? Chimp here with another very quick market update. This one's going to be a much shorter video than I typically do just because it's been a long day, so I don't think I have the capacity to speak for 20 minutes about what Bitcoin's going to do. Um, let's just start off with the TLDR. What's my thinking with Bitcoin at 94,800 here? Um, I still think the odds are skewed that we go up. I'm going to quickly present sort of like my thinking in both cases, and I'll leave it ultimately like up to you guys. I'm not going to tell you guys like, hey, you have to be max long or get short or whatever. I'll just sort of give you my thought process on how I think about the market. Again, I still lean towards us going up, but I think there are a bit more risks with where price is at right now. But I'll let you guys sort of be the judge of that one way or the other. So let's just start off with a couple bullish observations. And I'm not going to pull in the NASDAQ or the gold charts this time around, but I'll just reference them. So if you guys remember, we had that initial Trump tariff pause right here, and the Nasdaq pumped to like 19,000 something, and then the stock market ended up dipping again at some point, and then like now the stock market's at a similar price. But when we look at where Bitcoin's at, Bitcoin's obviously over $10,000 higher, and so again, like I've talked about this in previous videos, but I like to think about stock market volatility like um, let me think if I can formulate this mathematically in any way that makes sense, and maybe I'm just too tired to do so. Um, you really want to look at like the delta in how like this is the way I like to think about it. If Bitcoin is vulnerable, stocks going down a couple percent might cause a huge deleveraging cascade. But if Bitcoin is like not that vulnerable, like a massive stock market crash could cause prices to go down, but it's probably going to be temporary and it's going to not be as much. So like we had like a cataclysmic stock market crash, right? You know, basically the worst stock market crash in the last 2.5 years. Like obviously the stock market went down a lot in 2022, and for the most part, like like you had multiple of these sort of quote unquote crashes. Like really, the crux of that crash sort of started like maybe around here. This was like the crux of that move, um, and like Bitcoin dumped and it auto rebounded. So to me, like that tells you the market's pretty deleveraged. Now, obviously, that's not the only indicator. I'll talk about the rest in a second here, but like you want to observe that like price action versus strength, right? So like I don't know what the Nasdaq's going to do, but when the Nasdaq does something, I can see how Bitcoin reacts. And if the Nasdaq does something and Bitcoin reacts, modestly but nothing crazy, that movement is probably uh like the correlation there is probably much weaker. Now, what are some other reasons why we might think like, hey, Bitcoin's pretty deleveraged? Well, again, I'm just going to go through the same reasons I always go through, and like this is sort of the way you should think about trading, in my opinion. Is you want to always rehash like what are reasons you want to be bullish and bearish, and go over them because those facts could change, and I'll show you how like one of those facts, for example, might have changed a little bit, right? So for example, what's the reasons why I think the market has deleveraged? Well, we've gone like 3 months straight down, right? Like the market basically went straight down um, from Trump's inauguration to mid-April, so 3 months. And the question you have to ask yourself is like, are there like so many new margin longs that are vulnerable of getting liquidated? No. Are there that many shadow players like the 3ACs or Celsiuses or all these like mega, lending fraud Ponzi schemes as there were in the past? Probably not. Are the ETFs like super vulnerable? And I think like again, when you look at something like the ETFs, they were offloading a lot. And again, like this analysis is gonna be a little bit botched. You could say they were offloading a lot sort of from this range to this range, but sort of the secondary range, and let me just change this like pen color. Maybe not. Let's just do this. Like this secondary range, like ETFs have not been offloading, right? And actually, what have we seen? Like, ETFs have actually been like mega purchasing recently. So And then like what's another indication, right? Like alts. Like obviously I'm not going to pull up where alts are. Like we'll talk about where alts are today because it's a little bit of a different story. But for example, like Solana went from 300 to 100 in a straight line. Like you don't want to start shorting something like a Solana or some of these alts once they're already down so much. Like you just have so much risk. And yeah, you could get lucky, right? Like you could short Solana at 120 and close it at 110, and maybe you get lucky and maybe you make money off that trade. Great. But like ultimately there's a lot of risk there, right? So like when the market's already bled off so much, you don't want to be thinking about, hey, let me short a micro bounce. That's typically not what you want to think about. So what are the main reasons why I'm bullish? Couple. First of all, I think this support was like very meaningful. This like I think like especially on the first sort of like attempt at it, obviously it was going to bounce. Um, or like I shouldn't say obvious, but you know the odds were heavily in the favor of it bouncing. I think that a lot of people deleveraged, and when you look at something like open interest, let's redraw that. When you look at something like open interest, uh, people were actually getting super short on the way up. So like trader psychology, like people were really shorting like on the way up, and actually you ended up getting shorts getting sort of blown out. So like trader psychology is like now just shifting to longing. So like how many days have we been here? So like let's just put this on a daily candle chart, right? The day that we pumped, let's not count that because it wasn't really, it was sort of like at the end of the day. 1, 2, 3, 4, 5, 6. So this is a 6-day. Has everyone like who wanted to get long gotten long? I don't think so. Like typically, and again, like this is my experience, you sort of need to get a like when you get a pump like this, what ends up happening? People are expecting a dip larger than you're gonna get. So like when you pump to 93, 94, everyone's thinking, oh, I'm gonna buy 89 or I'm gonna buy 91, and you don't end up getting those levels. And so over a period of time, like trader psychology sort of um, shifts to where it's like, okay, like I need to start buying these micro dips, right? So like, let me delete this drawing here. So like when we initially pumped here, people were sort of, when I was like looking at Twitter, people were like looking at maybe 90K to buy or whatever, and you look like these dips have all been super shallow, and like even today's right, like 94.5 to 90, like sub 93, and it auto bounces. Typically, like what you need to see for a protracted period of time, from my experience, is people willing to buy those micro dips. Like, okay, Bitcoin dipped $1,000, I'm gonna buy. Bitcoin dipped $2,000, I'm gonna buy. Like that trader psychology needs to flip, and I don't know if we're there yet. My guess is no. So my personal base case is like chop slash grind higher. And I think like the more you get sort of these micro dips that get auto bought, the more likely it is you get a bigger flush at some point. But I don't quite think we're there yet. Now, let me just sort of give the counterpoint. And again, like by the way, anything I'm talking about, if you guys have questions or you disagree with something, leave a comment. Like I'm reading all the comments. I'm trying to respond to them, especially if it's a question or whatever. I'm happy to address it. And obviously, I could be wrong, right? I'm just one trader. I could be totally wrong. Like I've been wrong in the past. I got my ads handed to me in the past, right? Like this is like the nature of the game. So if you disagree with me for some reason or another, let me know. Like I'll be happy to address it. And if I think you're right, like I'm happy to shift my bias too. That's not a problem for me. Okay, so I'll talk like the two main things I'm thinking on the bearish side, and I don't think they're strong enough reasons, but I sort of want to just present them. One is, and I'll give it, and the reason why I don't believe these are strong enough reasons, by the way, I'll say this, is because I think we're sort of in a paradigm where you just have money flowing into this asset class, and it's not really slowing down. And so this is why I don't think these are valid reasons. Or, sorry, I shouldn't say valid. This is why I think these aren't as concrete or strong reasons. But I'll lay them out there, and you guys can be the judge of it one way or the other, like for your own portfolio. One is, obviously we spent 3 months trading in this range, and we're sort of sitting at the bottom of that range. So like, I could see a world where this chops and then flushes back out. I think that's a possibility, because maybe there's still a lot of supply up here that wants to offload, that didn't offload, and now thinks like, hey, I got a second chance, like let me get the hell out. So I think there's a possibility there. And the other thing is like how much speculative capital is sort of in the market right now. It might be significantly less than what there was in like early or mid-December, right? So there's also that. And again, like the question is like, how do you judge these things? Actually, I shouldn't pick Sol because let me pick WIF. WIF is like still Sol beta in some ways, but it's not, you know. I know Sol has that like Sol MicroStrategy or whatever the hell it is. Let me just talk about WIF. So again, it's a tale of two perspectives. If you look at WIF zoomed out, it went down from $5 to like 30 something cents. So like insane deleveraging. So like in perspective to this, whatever pump we've seen to like 65 cents is almost meaningless, right? So on the bullish side, you could look at this and say, look, a lot of these alts, yeah, they've pumped, but from where, right? Like nowhere great. The bearish case would be like, look, from the lows, like WIF is up almost 100%. I mean, it's up more than 100%, right? So, and it's not just the case for WIF. Obviously, you can look at other alts and so forth. Like, obviously, you can find examples of this. So the bearish case would be like, look, man, like a lot of these alts are up a lot off their lows. It's possible there's speculative capital that's starting to really pile into these things, and I think that's also a valid case. So, lastly, I also wanted to show you this. Like, funding rates are still pretty negative too. I want to show this. Also want to show two other things. Sorry, one was funding rates, which are still quite negative. Actually, like they're even more negative as we've pumped, which kind of lends credence to me of the idea that like spot demand might just be accelerating. Like it's not just the fact that we pump. Like this could be reflexivity sort of in action, right? Like we pump and now actually demand goes up because like we're coming out of this like 2-month depression period and people see sort of like new light and they want to pile back in. The second thing I talked about in my last video was like, hey, you want to see leverage go up if you want to get bearish. And like to date, you know, open interest is like pretty flat. Like there's, you know, it comes on and comes off at the margins, but it's pretty flat. So again, as a whole, still leaning bullish. I think there's an argument to be made that we could go down. And I think like as a trader, you should definitely entertain that argument. But I'm personally not, you know, banking on it per se. So anyways, we'll see what happens. Clearly not as easy of a trade now than it was even a few days ago. I think a few days ago, like downside risk was so limited. Like I still think it's limited. I think the risks have gone up a bit. Like a few days ago, I thought risk was so limited that like it was super unlikely for us to dump. Obviously, like when we were obviously when we were here, I thought like new lows were impossible. Still think like I think even if we ultimately end up getting a flush, like it's probably just gonna get bought up again. So anyways, it's a bit of a rant. I don't even know how long this video was, but it says 13 minutes. So actually it was pretty similar to what I normally do. But anyways, figured I'd give a market update, give my thoughts, and until next time, guys, take care. Again, please like, subscribe, comment, and let me know what you think. All right, guys, take care.